On August 1, 2012, a Wall Street firm lost $440 million in 45 minutes. Not from a hack. Not from a market crash. From a deployment error, 1 technician, 8 servers. 1 didn't get the update, and code that had been dead for 8 years woke up and started buying high and selling low at thousands of orders per second. There was no kill switch. Knight Capital Group was not a small company. By 2012, they were one of the most important firms on Wall Street. 17% market share on the New York Stock Exchange, 16% on NASDAQ, the single largest trader in U.S. equities, $21 billion in average daily trading volume, over 19,000 securities, more than 1,400 employees. Their CEO, Thomas Joyce, had transformed Knight from a traditional market maker into an electronic trading powerhouse since 2002. The company was valued at $1.5 billion. And at the center of it all was a system called SMARS, Smart Market Access Routing System, the engine that processed over 3.3 billion trades. It broke large orders into smaller ones and distributed them across 8 production servers. Fast, efficient, and about to become the most expensive software bug in history. Deep inside SMARS lived a function called PowerPeg. It was an old order type from the early 2000s. Built for manual market making, its job was simple. Refresh orders at set prices and track how many shares had been executed. When the parent order was filled, stop sending child orders. PowerPeg was deprecated in 2003. Dead code. Nobody was supposed to use it again. But nobody deleted it either. Then in 2005, Knight engineers refactored SMARS. They moved the cumulative quantity tracking function to an earlier point in the code, a reasonable optimization. But it had a devastating side effect. PowerPeg's ability to know when orders were complete broke. Silently. If PowerPeg were ever triggered again, it would send orders forever. An infinite loop of buying and selling with no stop condition. Nobody retested PowerPeg after the refactoring. Why would they? It was dead code. Dead code that had just become a loaded gun. July 2012. The New York Stock Exchange launches its retail liquidity program. Knight Capital plans to participate starting August 1st. Engineers need a new flag in SMARS to identify RLP-eligible orders. But the bit field has no unused bits, so they make a decision that seems reasonable. Repurpose the old PowerPeg flag. It's been dead since 2003. The bit is free. New code gets written. The RLP code will interpret the flag as an RLP indicator. The old PowerPeg code is supposed to be removed. It passes code review, passes automated tests. Between July 27th and 31st, a technician deploys the update to all 8 production servers. The deployment script connects via SSH to each machine, copies the new binary. But the script has a critical bug. If an SSH connection fails, it fails silently. Reports success anyway. One of the 8 servers was under maintenance. Rejected the SSH connection. The script skipped it and moved on. 7 servers got the new code. The 8 servers still had the old code, with PowerPeg alive and now wired to the repurposed flag. No second engineer reviewed the deployment. No automated verification. No diff check across servers. Nobody knew. August 1st, 2012. 8:01 a.m. Knight's internal monitoring system sends 97 automated emails. The subject line references SMARS. The message says, PowerPeg disabled. Nobody reads them. They look like routine notifications. 9:30 a.m. Markets open. Knight starts receiving retail orders. SMARS distributes them across all 8 servers. Round robin. On 7 servers, the repurposed flag means RLP, normal processing. On server number 8, the flag activates PowerPeg. The dead code from 2003 wakes up. It does exactly what it was designed to do, generate child orders. But because of the 2005 refactoring, It cannot track fills, cannot recognize completion. It sends orders in an infinite loop, thousands per second, buying at the ask price, selling at the bid price, buying high, selling low, over and over. Within 2 minutes, other firms detect wildly abnormal volumes. Normally, stable stocks swing 5 to 10% with no news. For 45 minutes, Knight hemorrhages roughly $10 million per minute. 4 million trades execute, 397 million shares. Positions in 154 stocks worth $7.65 billion. And here is the worst part. Knight Capital had no kill switch for SMARS. No emergency shutdown button. When engineers scrambled to stop the bleeding, they panicked and uninstalled the working code from the 7 good servers instead of isolating the 1 bad server. They briefly made it worse. 10:15 a.m., 45 minutes after market open, Knight finally stops all trading. The damage, $440 million in losses. Knight Capital's total liquid assets were $365 million. The company was technically insolvent. Thomas Joyce went on Bloomberg TV that afternoon. His words were blunt. It's a big number. Technology breaks. It ain't good. The next day, Knight's stock plunged over 70%. The market was pricing in their death. Joyce went on CNBC and took full responsibility. Knight Capital Group screwed up last Wednesday. We screwed up. Then he added something that mattered. We took the consequences. None of our clients took the consequences. Joyce spent the weekend calling everyone. He needed $400 million by Monday morning, or Knight Capital would cease to exist. Approximately 90 parties expressed interest. Monday, August 6th, Joyce announces a consortium of 6 investors led by Jefferies Group commits $400 million in emergency financing. Jefferies put in $125 million alone. Blackstone, Getco, TD Ameritrade, Stifel Nicolaus, and Stavens rounded out the group. The cost. The new investors took a 73% stake and 3 board seats. Existing shareholders were devastated. Knight stock closed at $327, down from $10.33 a week earlier. Knight Capital survived. Barely. But the company Thomas Joyce built was already gone. The SEC investigation was devastating. File number 326. When number 25 millions of load in $25,9500 in Wenham 1. This $1 million in Wellian 2. Getco LLC, one of the 6 rescue investors, announced it would acquire Knight Capital outright. By July 2013, the merger was complete. Knight became KCG Holdings. Thomas Joyce oversaw the transition. Then he was gone. In 2017, Virtue Financial acquired KCG for $1.4 billion. The Knight Capital name disappeared entirely, from $1.5 billion valuation to erased from history, because dead code woke up. 7 failures, not one of them catastrophic on its own. Together, they cost $440 million in 45 minutes. 1. Dead code kills. PowerPeg sat dormant for 8 years. Nobody thought it was dangerous. Delete dead code. That's what version control is for. 2. Silent failures create false confidence. The deployment script said success. It was lying. Every failure should be loud. 3. Flag repurposing is a landmine. Reusing a bit flag meant one thing to new code and something catastrophic to old code. Flags are permanent assignments, not recyclable resources. 4. Manual deployments don't scale. 1 technician, 8 servers, no verification. Deployments must be automated, verified, and atomic. 5. You need a kill switch. Knight had no emergency stop. When things went wrong, the panic response made it worse. 6. Alerts must be actionable. 97 emails that said PowerPeg disabled. Nobody read them. If an alert looks like noise, it gets treated as noise. 7. Test your deployment, not just your code. The code passed review. The deployment process was never tested end to end. I think about Night Capital every time I see dead code in a code base. We all have it. That function nobody calls anymore. That feature flag from 2 years ago. That workaround somebody wrote for a bug that got fixed. It sits there, and we tell ourselves, it's not hurting anything. But Night Capital proves it can. Dead code is not neutral. It is state you have stopped thinking about, wired into a system that keeps changing around it, and one day, something connects to it by accident, and it wakes up in a world it was never designed for. The scariest part of this story is not the $440 million. It's that every single decision along the way was reasonable. Don't delete old code. It might be needed. Reuse a free bit flag. Why waste it? Deploy manually. It's only 8 servers. Skip the verification. We've done this before. Reasonable. Every one of them. And together, they were catastrophic. If you have dead code in your code base right now, this is your sign. Delete it today. Title suggestions. 5 options. 1. Dead code. Destroyed a 1.5B company. In 45 minutes. 50 chars. 2. That time dead code cost $440 million. Night Capital. 5.3. To 44 minutes. Lost in 45 minutes. The Night Capital bug. 49 chars.